The IRS collected over $4 billion in penalties from self-employed taxpayers last year. Most of that was completely avoidable. Freelancers make the same tax mistakes over and over, and it costs them thousands of dollars. Some mistakes trigger audits. Others mean paying way more tax than you should. In the next 8 minutes, I'm going to show you the 7 most expensive tax mistakes freelancers make and exactly how to avoid them. Note: this information applies to US-based freelancers and self-employed individuals. Welcome to the Freelancers Wealth Blueprint. Let's save you some money. Mistake number 1, not reporting all your income. This is the fastest way to get audited. The IRS receives copies of every 1099 sent to you. They know what you earned before you even file. If you report $50,000 but your 1099s add up to $60,000, the IRS computers flag your return automatically. Best case, you get a letter demanding the difference plus interest. Worst case, it triggers a full audit. Here's what trips people up. Starting in 2026, you won't receive a 1099 NEC unless a single client pays you $2,000 or more. The old threshold was $600. Some freelancers think this means they don't have to report smaller payments. Wrong. You must report every dollar you earn, regardless of whether you receive a 1099. That $500 project? Taxable. The $800 from a one-time client? Taxable. Cash payments? Taxable. Keep your own records. Track every payment. Don't rely on 1099s to tell you what you earned. Mistake number 2, missing quarterly estimated payments. As a freelancer, no one withholds taxes from your payments. You're responsible for sending money to the IRS 4 times per year. The deadlines are April 15th, June 15th, September 15th, and January 15th of the following year. If you owe more than $1,000 at tax time because you didn't make these payments, you'll face underpayment penalties. And these penalties add up fast, especially in a high-interest rate environment. The Safe Harbor rule says if you pay at least 100% of last year's tax liability across your 4 quarterly payments, you won't face penalties, even if you end up owing more this year. Set up automatic quarterly transfers. Put it on your calendar. Treat it like rent, something that must be paid on time. Mistake number 3, not separating business and personal finances. If you're running your freelance income through your personal checking account, you're making your life harder and increasing your audit risk. The IRS expects businesses to operate like businesses. That means a separate bank account for business income and expenses. When everything is mixed together, it's nearly impossible to prove which expenses were legitimate business deductions. Open a business checking account. It takes an hour. Run all client payments through it. Pay all business expenses from it. This creates a clean paper trail that protects you in an audit. Mistake number 4, claiming deductions you can't prove. Deductions are your best tool for reducing taxes. But claiming deductions without documentation is asking for trouble. If you're audited, the IRS will ask for proof. No receipt, no bank statement, no deduction. You'll owe back taxes plus penalties plus interest. The mileage deduction is the most abused and the most scrutinized. If you claim 20,000 business miles, you better have a mileage log showing dates, destinations, and business purposes. A round number like exactly 20,000 miles is a red flag. Same with the home office deduction. You need to prove your office space is used exclusively for business. That spare bedroom you also use as a guest room? Not a valid home office. Keep receipts for everything. Digital is fine. Apps like Expensify or even your phone's camera work great. When in doubt, document it. Mistake number 5, forgetting the self-employment tax. Income tax isn't your only tax bill. As a freelancer, you also pay self-employment tax of 15.3% on your net earnings. That covers Social Security and Medicare. Many first-time freelancers budget only for income tax and get blindsided by an extra $5,000 to $10,000 bill for self-employment tax. On $50,000 of freelance profit, you owe roughly $7,065 in self-employment tax alone. Add income tax on top of that. The good news, You can deduct half of your self-employment tax from your income. This happens automatically on your tax return. But you still need to plan for the full amount when setting aside money for taxes. My rule of thumb: set aside 25 to 30% of every payment for taxes. Put it in a separate savings account and don't touch it. Mistake number 6: missing legitimate deductions. The flip side of claiming fake deductions is failing to claim real ones. Many freelancers overpay their taxes by thousands because they don't know what they can deduct. Here are deductions freelancers commonly miss. Self-employed health insurance premiums. If you pay for your own health insurance, the entire premium is deductible. This is an above-the-line deduction, meaning you get it even with the standard deduction. Retirement contributions. Solo 401k and SEP IRA contributions reduce your taxable income dollar for dollar. This can save you thousands. Home office. If you have dedicated space used exclusively for work, you can deduct a portion of your rent, utilities, and internet. The simplified method is $5 per square foot up to 300 square feet, or $1,500 maximum. Professional development. Courses, books, conferences, and certifications related to your work are deductible. Software and subscriptions. Adobe Creative Cloud, project management tools, accounting software, all deductible. Mileage. In 2026, the standard mileage rate is 70 cents per mile for business driving. Track every trip. If you're not claiming these, you're leaving money on the table. Mistake number 7: trying to do everything yourself. I'm all for DIY tax filing when your situation is simple. But many freelancers have complex situations and still try to figure it out alone. If you're earning over $75,000, if you have an S-Corp election, if you have multiple income streams, or if you're considering major tax strategies like a solo 401k or SEP IRA, you probably need professional help. A good CPA who understands freelancers will save you more in taxes than they cost in fees. They'll catch deductions you missed. They'll help you structure your business properly. They'll keep you out of audit trouble. The cost of a CPA is also tax deductible as a business expense. Here's a quick recap of the 7 mistakes. 1. Not reporting all income. Track everything yourself. 2. Missing quarterly payments. Set up automatic transfers. 3. Mixing personal and business finances. Open a business account. 4. Claiming deductions without proof. Keep receipts for everything. 5. Forgetting self-employment tax. Set aside 25 to 30%. 6. Missing legitimate deductions. Know what you can claim. 7. Doing it all alone. Get help when your situation is complex. Fix these 7 mistakes and you'll keep more of what you earn while staying far away from IRS problems. If you want to learn more about maximizing your deductions, check out our video on the 5 tax deductions every freelancer misses. Link in the description. See you in the next one.